Good afternoon and welcome to Deutsche Telekom's conference call. At our customer's request, this conference will be recorded and uploaded to the Internet. May I now hand you over to Mr. Hannes Wittig.
Good afternoon, everyone, and welcome to today's third quarter conference call. I have with me Tim Höttges, our CEO, and Thomas Dannenfeldt, our CFO. Please find our disclaimer as part of our presentation. With this welcoming words, I hand over to Tim, who will share his thoughts before Thomas will dive into the financials.
Very fast, Hannes. Thank you very much, and welcome everybody to this conference call here today. And I like to start with my key messages on first slide. In this quarter, like in the previous one, we made very good progress towards our guidance for this year and towards the strategic targets we communicated to you at this year's Capital Markets Day. We are very happy to reiterate our guidance and these targets today. Our financials are growing strongly, most of them, by the way, double-digit. Our revenue grew by 9% year-on-year. Our adjusted EBITDA grew by almost 13%. Our organic EBITDA growth was 8.1% and even faster than the 6.7% growth in the last quarter. Our free cash flow was 1.3 billion, up 16% year-on-year. It was another quarter of better than expected performance in our core KPIs. In the US, we simply won't stop. We gained 2.3 million customers and extended our lead over Sprint. We raised our 2015 subscriber guidance for the third time this year, and again without changing our financial guidance. In Germany, we made good progress. Our line losses of 83,000 were the lowest in 11 years. And we added 235,000 broadband subscribers in the 9 months, of which 78,000 came in the third quarter. Remember, at the beginning of the year, we promised that we come up with higher numbers than the quarters 2014. Our strong KPIs are driven by our network investments, but also reflect the success of our Magenta 1 bundle offers, where we now have 1.6 million customers after 1 year. This is, by the way, already half the way towards the 2018 target we shared at the Capital Markets Day. The success of our convergent offers impacts our headline service revenues, but our underlying trends remain healthy and our mobile service revenues are on track for our medium-term guidance. While we deliver strong financials, we added almost 3 million German lines to IP in the first 9 months, on track for completion of this very ambitious project at the end of 2018. As you know, we are not only investing in an industry-leading all-IP migration, we are also rapidly building out our LTE and fiber networks. We now reach half of German homes with fiber, a coverage increase of 10 percentage points within 1 year. In the last 12 months, more than 1.6 million new German homes choose our fiber network. At the group level, we invested almost 8 billion in the first 9 months, a double-digit increase on the prior year, 15.5% increase. As I've mentioned, while we are tracking ahead on many core KPIs, we are happy to confirm our financial targets. This is due to our strict cost control. In the US, despite the faster than expected subscriber growth, we continue to expect $6.8 to $7.2 billion of EBITDA this year. In Germany, despite the faster than expected growth in fiber, all IP and Magenta 1, we still expect 8.8 billion euros of EBITDA this year. At the group level, we reiterate our guidance for 18.3 billion adjusted EBITDA and 4.3 billion free cash flow. As you know, our guidance is based on last year's average exchange rates and excludes the 175 million one-timer we reported in Q1. If we were to use the year-to-date average dollar exchange rates, our EBITDA guidance would translate into 19.3. And we remain happy with the current consensus expectations of 4.4 billion free cash flow this year, which compares to 4.1 in 2014. We also successfully concluded a number of small but interesting transactions in recent months. Our deal with T-Online shows how we embrace the best ownership principle while we create strategic options. The launch of our direct air-to-ground project demonstrates our passion for seamless connectivity on the ground, on the move, and in the air. And at the end of last quarter's call, I emphasized our commitments to cut costs and to monetize of our network. And I'm pleased that our cost discipline allows us to grow our cash flows while we are investing record amounts. But we will always try to do more. As for the monetization of our network, clearly we are very pleased with our customer momentum, but again, there is clearly more that could be done. In this context, let me say a word on our Magenta 1 convergence propositions, which are attracting a lot of attention. Magenta 1 is tracking well ahead of our initial plans. We have already more than half the customers after 1 year that we were hoping to have after 4 years. Our revenues per Magenta 1 households are higher than before due to successful cross and upselling. When it comes to the discounts, you have to look at the total picture. Rather than increasing our promotional spending, Magenta 1 bundle benefits have replaced other previous discounts. And because of the success of Magenta 1, we have since been able to additionally remove various discounts this year. Give you an example. For instance, at the beginning of September, we have halved our promotional period for our VDSL offers. And since November, we have also discontinued our regional broadband promotions. But precisely because of the success of our Magenta 1 propositions, we now have the ability and will continue to increasingly shift the focus on monetization going forward. Slide 5 summarizes our core financials. As already mentioned, we achieved strong headline and organic sales growth. Driven by our double-digit EBITDA growth, our earnings grew by 30%. Despite our increased investments, our free cash flow grew by 16%. The year-on-year increase in our net debt is mainly the result of spectrum investments and currency effects. But our debt declined sequentially and, as promised, we are back within our target corridor. In summary, we are very happy with our operational performance year to date. We are able to accommodate major long-term investments while we achieve some very strong customer metrics and confirm our full year's financial guidance. The next slide provides a bit more detail on 3 interesting transactions in the quarter. Before I touch on this, let me say that we are very happy with last week's decision by the UK Antitrust Authority, CMA, to recommend the approval of the BTE merger without remedies. We believe this merger is a great opportunity to create value for shareholders and deliver an ever better customer experience. In August, we gave our T-Online general interest portal to Ströer, one of Germany's, by the way, the Germany's leading outdoor advertising company, in exchange for 12% of the equity and 2 board seats. We are very happy with this strong partner and see sustainable strategic benefits from future collaboration. For instance, the increased visibility of the T brand in the out-of-home furnitures of Ströer. This transaction shows again how we are happy to exchange control for strategic upside where it makes sense. In a much smaller transaction, we also agreed an exit from our phone book publishing business DTEGY. In 2013, we had sold 70% of Scout24. We used the recent IPO to further monetize this asset and have now raised over 2.1 billion euros from this successful investment. we are still participating in futures upside through our remaining 14% stake. In September, we announced a highly innovative partnership with Inmarsat to provide hybrid LTE satellite connectivity to European airlines, starting with our launch partner Lufthansa in 2017. Across whole Europe, we will operate 300 new base stations to provide a customer experience similar to the comfort of high-speed broadband at home. Like our hybrid router, this project shows how we deliver on our passion for superior and seamless connectivity. By the way, this air-to-ground service is coming with bandwidth of 4G speed in the vicinity of 75 megabit per second in a flying plane. And there are 22,500 planes which are traveling across Europe every day. And finally, please let me use this opportunity to reiterate our stated European M&A policy. We are not looking at major acquisitions outside of our footprint. We believe our recent transactions provide compelling evidence that we are highly committed to pursue M&A only where there is a clear opportunity to create value for shareholders. And now I hand over to Thomas for a more detailed review of this quarter.
Yeah, thank you, Tim. And as always, I'm going to start with Germany. Our sales in Germany were stable. While growth in our handset revenues was lower than in the previous quarters, obviously here due to less spot market sales, our total mobile and fixed service revenue momentum improved sequentially. The margin was 41% in the quarter, with the year-on-year decline largely driven by growth in handset sales and transformational costs. Adjusted EBITDA declined by 2.4% year-on-year as a result of cost phasing, but we firmly reiterate our target to achieve stable 8.8 billion EBITDA this year. While our mobile service revenues declined slightly year-over-year, we believe nevertheless we outperformed our peers. Our contract subscriber momentum was steady with close to 400,000 net adds. So now let's have a look at the German mobile service revenues. Year on year, our reported mobile service revenues declined marginally, but we're not worried because this mainly reflects the success of our Magenta bundle offers, and we're not seeing any major change in the market environment, nor in our underlying trends. As you know, we report our Magenta 1 bundle discounts in mobile service revenues, as well as the migration from LTE broadband to our new hybrid router, which are then booked in fixed. The combined impact from these convergent propositions on our reported mobile service revenue growth further accelerated from 1 percentage point last quarter to 1.4 percentage points this quarter, largely explaining the sequential slowdown. Now let's turn to the fixed line. We had another excellent quarter of broadband net additions. And remember, Q3 is normally our toughest quarter. Last year, we lost broadband customers. This year, we added 78,000. Tim has already mentioned our continued strong growth fiber momentum. 425,000 additional households opted for our network, bringing the year-to-date net additions to 1.3 million, with a majority in our brand. Helped by our strong broadband momentum, our line losses diminished further to only 83,000, our best performance in over a decade. Positively, driven by our successful retail upselling strategy, retail broadband revenue momentum has now turned firmly positive. And benefiting from this, our core fixed revenue declined by 2% compared to minus 2.7% in the last quarter. On the next slide, we want to provide some additional perspective on our German performance. Last quarter, we introduced the concept of total German service revenues, defined as all mobile service, wholesale, and core fixed revenues, excluding the devices. These were down only 0.6 this quarter, and that is an improvement compared to the last quarter, benefiting from a better broadband and a better wholesale revenue momentum. Bigger picture, we can see that as a result of steadily improving broadband revenue momentum, we are tracking around a 1% decline this year, which is more than half of a percentage points better than last year.
Broadband revenues are well on track for our 2% annual growth guidance we provided at the Capital Market Days, and wholesale revenues are well on track for stability as promised. So, while there are many forces at work here, we see our KPI trends going in the right direction, and we remain comfortable with our guidance for total annual German revenue growth of 0.3% between 2014 and 2018 we gave in Feb. As we discussed at our Capital Market Days, we are accelerating our investments in high-speed infrastructure. By the end of the quarter, we reached every second German fixed-line household with fiber, adding 10 percentage points of coverage in 1 year. Our LTE coverage increased to 87%. In the quarter, we added 0.9 million lines to our IP footprint, and we now already have 8.6 million homes on this platform in Germany, 1/3 of our total lines. With this, we are again well on track towards our 2018 target. Now turning to the US, let me quickly summarize the highlights of the quarter. I think all relevant numbers were already reported and discussed by a US team, but it's helpful, I think, to summarize the key messages. T-Mobile US added 2.3 million customers this quarter. Of these, 1.1 million were branded postpaid net adds. Importantly, TMUS raised its 2015 branded postpaid subscriber growth guidance for the third time this year to between 3.8 to 4.2 million. This is up from 3.4 to 3.9 million at the half-year stage and compares to 2.2 to 3.2 million at the beginning of the year. Again, while we raised our subscriber guidance, we did not change our EBITDA forecast. Revenue growth slowed sequentially to 7% year-on-year. And this was mainly due to the recent introduction of jump on demand on our equipment sales. Leasing revenues were below 50 million in the quarter. Service revenue growth remained double-digit at almost 12%. And our branded postpaid phone ARPU was stable sequentially. Despite the strong growth, US EBITDA growth accelerated further to 41% from 23% last quarter. Handset leasing contributed little to this improvement. And let me again clarify here the treatment of handset leasing to avoid any misunderstanding. The impact from handset leasing will be excluded and is excluded from our restated guidance. And as we have promised, we will be fully transparent on the accounting effects here. On the next slide, we are showing how some of the key drivers of our US businesses are developing. We had another quarter of declining churn, with branded postpaid churn again down a record 18 basis points year over year. Porting ratios remained positive against all carriers. After a meaningful decline last quarter, bad debt expenses ticked up this quarter, but they remain under control. Our LTE network already now covers the 300 million POPs we targeted by the end of the year. And our low-band 700 MHz frequencies, covering 60% of the US population, has already been deployed for nearly 175 million people. They are beginning now to become commercially relevant. Positively, the new iPhone supports these frequencies. Despite our network expansion, our cost of service declined more than 4 percentage points year on year, benefiting strongly from Metro PCS merger synergies. So, back across the Atlantic to Europe. Our European segment reported a 3.6% revenue decline. Compared to the previous quarters, GTS has now rolled over, while the planned unwind of our discontinued business continues to be a headwind. Organic revenues declined 3.7% year-on-year after 2.7% last quarter. On a country basis, we remain particularly pleased by our performance in Hungary and Greece. Meanwhile, our Dutch business continues to be impacted by intense competition and the rollover of the split contract launch. We are responding to this through innovative product offers and through investment in what we believe is the leading LTE network in the country. On a reported basis, adjusted EBITDA declined by 3% this quarter after 2.6% last quarter, mainly reflecting the rollover and the de-emphasizing of split contract plans. We continue to make good progress towards the targets we presented at our Capital Market Days. 45% of lines are now on IP in terms of our technology leadership, up from 35% last year. Our broadband customer base grew by 5%, our TV customer base by 4%. Our LTE networks now cover 65% of the population, up from 42 1 year ago. And we already cover 18% of homes with fiber. Now turning to T-Systems. Our results reflect our ongoing restructuring at the market unit, as well as continued cost savings delivered by Telekom IT. Gross revenues grew by 2.3% after a decline of 1% last quarter. This benefited from 5% year-on-year growth at our market unit. We are especially pleased with our cloud services, where DT grew 30% and achieved 1 billion of sales in the first 9 months. Revenue growth also benefited from the toll collection system in Belgium. System Solution EBITDA declined year-on-year this quarter, but this reflects mainly the phasing of launch costs. When you look at the first 9 months, the market unit has delivered 16% EBITDA growth. Now let's move on to our group financials for the quarter. Free cash flow grew 16% year-on-year, and we remain comfortable with the current consensus expectation for this year. As mentioned, we were able to deliver this increase despite a significant increase in our investments. Our net debt diminished sequentially, mainly as a result of our positive free cash flow. The adjusted net income grew by 30% to 1 billion, mainly as a result of our strong EBITDA growth. Finally, a few words to our balance sheet ratios. At the end of this quarter, we returned to 2.5 in net debt over adjusted EBITDA, as we promised, down from 2.6 at the end of the last quarter. Our ratings remain stable at BBB+ and are well within our comfort zone with ranges from, as you know, BBB to A-. We believe our debt ratios should be seen in the context of a very strong EBITDA growth in the US and the group level. So we believe this quarter shows that we are executing our strategy as we presented it to you at the recent Capital Market Days and as it is laid out on this slide. And with that, Tim and myself are happy to take your questions.
Thank you very much, Thomas. Now we are looking forward to your questions. If you'd like to ask a question, please press *1 on your touch-tone telephone. I will announce your name when it's your turn to ask a question. Should we require to cancel your question, please press the *2. Alternatively, you can send us questions via webcast. Just type your question into the box below the stream. Thank you. The first question is from Dominik Klarmann from HSBC.
Yeah, thank you very much. Firstly, just on Magenta 1, what's the upselling momentum at the moment? So how much of the €10 discount are you able to offset versus the, I think, about €5 run rate in previous quarters? And why do you still feel you need that €10 headline discount? And then secondly, just on German fixed, now that we have that rather positive decision by BNetzA on bitstream regulation last week, where do you want to price layer 2 versus layer 3 bitstream? And what's your expectation on the still pending vectoring decision? Thank you.
Hi, Dominic. This is Thomas. I'll take the first question. First part of your question was upselling momentum in Magenta 1. We are now talking about €6 to €6.5 upsell after transaction. So if you take the revenue of a household before the transaction, you take it after the transaction, actually there is a plus €6.5. So momentum is so positively, so to say, accelerating versus what you've seen in February and in the mid of the year. On the discount, you know, Tim mentioned that several times, and the debate we're having here internally obviously is all around monetization. But the way we look at it is we look completely at every promotional element and discount we're given. Tim mentioned that we've taken out the 24-month promotional period in, I think it was September, moved it down to 12 months. We took out Q2 already, the free routers. We're now removing the extra promotion in some regional areas. So the way we look at it is not solely on that specific discount element, but the complete sum of all the parts. And we feel there is room to maneuver, and that's why we're taking it off. So far, we keep that discount as it is because the transaction per se is very accretive. As I said, it's €6.5 after transaction plus.
Yeah, Dominic, first question on the bitstream access regulation here. The first thing, this is an ongoing process. It's a negotiating process. It's, we make some documentations here, and we are in a discussion here with the different parties. The Bundesnetzagentur decided on October 29th that fees for the Layer 2 and the Layer 3 bitstream access will be subjected to uniform regulation by the standards of the abuse of dominance. So because of the future importance of Layer 2 bitstream, the Telekom Deutschland must submit the Layer 2 bitstream charges always ahead to Bundesnetzagentur for approval. So this is, let's say, the formal wording on this one, and we're in the middle of this this process. What my stomach tells me is the following: the market, the politicians enjoy Deutsche, seeing at least Deutsche Telekom investing heavily to infrastructure, and this is a good momentum. Overall, we see more capex in the market due to the better regulatory framework, which we all enjoyed over the last 2 years. So I do not see any kind of aggressive, tendencies, to negatively influence this this track record. Now, going to the third question of vectoring, look, I made that clear in the German press. We have a debate on regulatory and politically industry policies here, and we simply forget one thing: the customer. There are, areas in the vicinity from 65 to 80% of the POPs in Germany who are not able to enjoy high broadband connectivities. And Deutsche Telekom, made clear we see a way to invest almost $1 billion into these areas and to support broadband infrastructure up to 250 megabit. So this is vectoring and vectoring plus technologies in these areas, just from our house. And the only thing what we need is the allowance from the Bundesnetzagentur for this so-called Nahbereich. Now, that said, I think there are no good arguments so far from our competition, because we simply need these investments. If they are able to do it, fine. We make it legally binding to the government that we are committed to this one, that this is not just getting any kind of regulatory advantages here, that we are really committed to do so up to 2018. And now we will see how the decision is getting taken. We expect something coming faster than waiting longer. But we have to admit that there is the Bundesnetzagentur, and a separate decision body within this Bundesnetzagentur is in charge of that, and we should wait for the decisions from this audience.
Thank you, Tim. Okay, we have got a question from Simon Whedon at Citi. Simon has asked us, could you please comment on the fall in German contract net adds and the increase in contract churn, and whether there are any technical factors behind this?
Yeah, maybe I start with the contract churn side. Reported contract churn was 1.9%. I'm going to split it up for you so it's easy to understand what's going on here on that level. The contract churn on B2C on our own branded side was last year was 1.0 and it's 1.0. So there is no change on the B2C side, basically on the contract churn. There are two elements which influenced that number and moved it up. One is, the big one is MVNO element in churn. Here, a big chunk of that one. Then there is a smaller one, which is 20K of hybrid router, LTE router to hybrid router. And then there is a large account we lost in Q3, which is roughly 25K. And that is influencing the churn in Q3. So there is no general negative trend behind, but as I said, an MVNO element and that specific large customer, and that is also related then to the net adds. You've seen the net adds declining roughly year on year by 90K. As I said, 20K is LTE router to hybrid router, 25 is the major account we've lost, and then there is another 40K roughly on a promotional tariff plan from last year where we had very low level of ARPU behind, which is booked out. So that are the elements on the net adds.
Okay, so I understand that we are back with the ability to take your questions in person. While you get ready for that, let me just read out a question from John Dan at RBC. John asks, first, do you expect the German broadband momentum to continue beyond the year 2015? And secondly, he would like to know whether our capex in Germany could possibly drop below 4 billion, given our technology benefits that we have from vectoring. So, Thomas, maybe you can help us with that.
Yeah, first question was momentum on 16 is yes, and second question below 4 million is no. A billion, sorry, is no. We clearly said on the capital market days we're gonna grow free cash flow while we will grow the capex, because the investment need for more bandwidth is there, and we will go for that.
Thank you, Thomas. The next question, we now go back to Ulrich Rate. Ulrich, can you please ask your question once more? Thank you.
Thanks very much. Two questions, please. The first one is, could you comment on the mix of the subscriber intake in mobile, in particular between the branded ones, between the sort of the Magenta and the Kongstar one? And I would be interested to know, of course, where the mix currently is, but also whether it has changed over recent times. My second question is with regards to the Magenta 1 discounts and the fact that you simply add them back in totality to sort of compare that to the midterm growth. And I understand it's a midterm growth, it's not a quarterly growth. But if one, I mean, these discounts are permanent, so if one adds back some fair share to the mobile trends, it still looks as if your mobile growth currently is running a bit below the midterm trend. So would you agree with that? And if yes, what would take the trend back up really towards that 1%, even after sort of the fair allocation of Magenta 1 discounts also to the mobile business? Thank you.
Yeah, I'm going to start with a question on Magenta versus Kongstar. On that 144 net adds, it's 50 to 60 is Magenta and roughly 90 is Kongstar. That's in terms of net adds. That's not in terms of value, obviously, and the value mix is different. It's much more towards Magenta. That was your first question, I think. And the second question was, obviously, what will happen is, I think it is towards the guidance we've given on the mobile service revenues, 1% guide. To stick to that guidance, we think we will see that 1% growth next year and in the midterm, as we said. Obviously, what will happen is that kicking in an acceleration, that positive one of Magenta discounts, will have a rollover effect after 4 quarters and then decline again on the comparison year on year.
And maybe if I can add a word to this, I would highlight that, of course, our guidance was based on the assumption that we will have 3 million Magenta 1 subscribers by the year in 2018. Now we have 1.6 million at the end of the third quarter 2015. So clearly the drag is far higher because our growth in Magenta is faster. But if you adjust for that, we are completely in line with our medium-term guidance. And if, of course, the Magenta 1 growth were to slow down beyond the rollover effect, you would also get less of a drag from that. But of course, we enjoy the growth in Magenta, so that's something you should see in the total picture. So I hope that answers your question, Ulrich.
On the mix question, you answered it very clearly for the current mix. Has there been a material shift in the mix recently in the third quarter, or this year? That's between the first and second and third quarter. Thank you.
No. It's kind of stable trend during the course of the last quarters.
Yeah. Generally, I think what you should also appreciate when you look at the trends is that last year in September we decided to start the Magenta propositions only at 30 euros, so we moved them up in the market. And of course, with that clear brand positioning, you get a bit of an extra momentum in Kongstar. But that's a very deliberate choice. So in terms of the quality of the intake, there is no difference to what we have seen or are hoping to see. So with that, maybe the next question is from Mathieu now. Mathieu at Barcap.
Hi, thank you for taking the questions. First, in terms of the German cost cutting, as you highlighted, cost cutting has a bit stalled in the Q3. You do expect to make that up in Q4. Can you give us a little bit of color as what happened in Q3 and how things can improve in Q4? And the second one has to do again with mobile service revenue trends and monetization of data. One of your competitors has indicated that the proportion of customers that take more than 1 gigabyte is increasing nicely this quarter. Can you give us a little bit of color as to how these trends are? And also, can you reassure us in terms of the competitive environment going to the Q4? Thank you.
Yeah, sure, Mathieu. Let me start with the EBITDA, and as I think it was very clear that we stick to our 8.8 stable EBITDA development for Germany, which obviously does mean Q4 on a year-on-year basis needs to look much better than in 15 than in 14. And we are very comfortable with that and confident that we will reach that A, because basically last year's comparison was very low, to be fair. Secondly, in Q3 we had a heavy load on the indirect costs, very much related to IP transformation and a rollout, so preparation of new infrastructure. We will roll out we will bring 2.4 million new households in place in Q4, which were prepared in Q3 already. That is the size of all households in Denmark, as just to give you a kind of color what that size means. So that kind of preparation caused higher indirect costs in Q3, and that's a simple question of phasing we have in here within the year. What we will not do is reach that 8.8 stable EBITDA by doing compromises on the commercial side. We will not compromise there. So we will stay with our, I think, competitive setup of products and of offers we have in, and we'll reach that 8.8. And as I said, it's a matter of phasing of infrastructure build out and IP. That was number one question. Second question was on.
So I'll help you out here, Thomas. The question was on the data usage in the marketplace, and what we see is the moment customers are using LTE, their data consumption is going up. By the way, what we've seen on the consumer side is that with LTE devices, there's a 169% higher data usage than customer without an LTE device. So what is the message for us on that one? The first one is data consumption is increasing. The second conclusion is there is Moore's law in our market that the more consumption it is, you have to produce the gigabyte cheaper. And the third one is it has to get balanced in the way that you over time increase your ARPU by so overcompensating the volume effect by price stability. That is, let's say, the intention which we have. And so it might be that we increase the data volumes over time, but always with the assumption that we could make money out of it.
Thank you, Tim. And with regard to the competitive environment in the fourth quarter, I think we're seeing some promotions right now, but of course, fourth quarter is a quarter that usually has a fair promotional intensity. I think there is an attempt to sell iPhones, etc. But when you look back over the last 6 to 8 quarters, there's no major shift in terms of the commercial propositions that we are seeing in the German market, and we are, of course, hopeful that this will remain the case. So we have a question from Akhil at JP Morgan, please.
Yeah, hi, good afternoon. Two things, please. Firstly, just to follow up on the question on competition, you've talked about how you're unwinding some of your price promotions as an offset to Magenta 1, and if we look through your results sheet, you've also seen quite a nice reduction in your SSCs and SRC as well. So can you just comment, is that purely just a function of that, or is that also reflective of kind of a more positive view in terms of competition? And I guess related to that, Telefonica Deutschland on their call earlier today seemed to suggest that some of the promotional activity at the low end of the market has eased off, and some of these promotions haven't been repeated and continued. So just kind of any thoughts and updates around that would be useful. Secondly, just on Magenta 1 and the discount there, you've given us a helpful slide in terms of the overall drag and the way that that's been increasing on the mobile service revenue performance. Just wondered if you could help us understand the evolution of that. Obviously, the momentum's continuing, but next quarter starts to annualize that. So should we think we're through the bulk of the dilution on service revenues and it's stable to improving? And then just a very last one on the follow-up from the previous question on mobile data usage. If you have any stats in terms of the overall year-over-year growth in Germany, whether it's accelerating or slowing, that'd be helpful as well. Thanks.
Yeah, first of all, on the SRCs, SAC, CRC development, I think one element is in the comparison between last year and this year is for sure that the run rate and the take-up rate of iPhone 6 versus iPhone 6s, so last year's versus this year's, in especially prolongation of contracts, is reflected in the CRC spend here. So a part of the reduction you see is related to lower run rates versus the 6 versus 6S. And the same holds true, by the way, on the Samsung side. Another one is that churn is in a good shape, that loyalty is increasing also, especially by Magenta 1. So there's also some positive upside element from Magenta 1. As Hannes said on Magenta 1 discount a minute ago, on the midterm perspective, we're given that guidance of 1% service revenue growth on mobile, and that implies that over time we will see that that negative impact becoming lower or diminishing. So we stick to that 1% midterm perspective on the mobile service revenues. And the third one on mobile data usage, Tim mentioned that the question was, what about the more than 1 gig usage in the marketplace? You know, it is basically driven by the new equipment you have in the marketplace. You know, a Samsung S is with 1.1 gig usage of average use of our customer. iPhone is 1.2, the iPhone 6S. 6S Plus is with 1.6. So those handsets are, by their capabilities, consuming more bandwidth, and so it's moving up the consumption, obviously.
Yeah, just to give you add a bit of data to that, we have the usage has grown by about 100 megabytes a month since a year ago in the residential customer base, and a bit faster in the business customer base, and the growth is pretty steady quarter on quarter. With that, the next question is from Justin at Credit Suisse. Justin, can we have your question, please?
Thank you. Yeah, a few just small ones, please. As you said on the call, you believe now you've got the best mobile network in the Netherlands, and certainly some of the tests, the user tests, support that. What are you going to do with that? Are you going to push harder now for market share, or try and achieve the greatest value on a sale of the asset, or perhaps both? Secondly, there's been a few stories in the last few weeks about looking at quality of service in light of the net neutrality laws. Just wondering if you could give us a big picture, a size of the opportunity there, please. And finally, would you consider doing a tower spin-out, given the recent valuations of these assets? Thank you.
So, Justin, thank you. The first question is on the Netherlands. Look, it's a bit like, déjà vu from the US situation. Over the last 1.5, 2 years, we have built the network on LTE. We have now a great network. The network has now reached a 95% coverage by the end of October. Latest LTE standard here. We have restructured the total, let's say, layout, and the network is almost, empty. So the bandwidth is very high, and you saw that in the tests. Now, what we have to do now is, to create the connectivity experience around that we have restructured our tariffs. We have encouraged more commercial momentum in the market. We have done some promotions to announce our infrastructure and the capabilities which we have. We called it the transfer weeks, which brought us back into the net best growth. So we are doing something now to create a proposition around it. I think price is not the ultimate answer for us, especially if we have a leadership in some categories. It's anyhow not the smartest answer if you have a fixed mobile convergence play against you. So it is about, let's say, the total proposition. It has a lot to do with the service, it had a lot to do with the branding. So if you would give me, let's say, a ranking, it would be value on services, then rather going for the quick, gross add numbers here. Now, coming to the second question on net neutrality laws, funny thing, because I wrote a blog after the decision, and there were some heavy reactions here in Germany from network activists on this kind of quality classes which are now allowed. The specialized services with improved quality, in addition to the good internet access services, is the compromise which was achieved in the discussion between the different internet groups. I think this decision represents a very balanced compromise. So the optionalities are now given. It's much too early to talk about, let's say, a monetization on that one at that point in time. I think there are a certain industry who would have a need for this specialized service. I don't want to reiterate the health industry or the connected car industries, but it could be as well for some of the smaller companies starting up with specialized service who cannot afford having decentralized data centers like Google and Co. have today, that these kind of companies are interested on improving their bandwidth and their quality here. So this is something we're going to offer. Honestly, it's too early to say because so far no service have been launched. But I think the first big step has been taken, promised and delivered from the Commission and from the European Parliament, and we could be sufficient, or let's say satisfied with the outcome of it.
And maybe an answer on the tower question from my side. There are two parts of the answer. One is, obviously. Towers, we own the towers in Germany, a big tower company, and it's a part of the what I call lineup of deleveraging opportunities we have, and it's like the towers, it's like the remaining Scout and so on and so on. So that's obviously one part of it. The other part of the answer is tower company first of all has a nice margin per se, number one. Number two, it will become more and more important towards 5G that you have control on your locations, on the antennas, on what you can put there, etc., etc. So it's not just like, there are nice valuations right now, let's go for it. That's obviously an opportunity and we consider it. But there is another strategic element of the question, which is looking at 5G and locations. Is that the right way looking forward? So as I said, we consider it, but not more so far.
Thank you, Thomas. The next question is from Tim Boddy at Goldman, please.
Yes, thanks very much. I wanted to ask a bit about the impact of super vectoring and potentially over time G.fast and how you see that playing through. Obviously, it's very encouraging that you hopefully wouldn't have to do fiber to the home at huge cost in the near or even the medium term. So I guess the first question is, has this pushed out fiber to the home deployment, by a decade or more? Secondly, do you think you have enough room in your CapEx envelope to fund super vectoring, which I think you're looking at late next year or into 17, and then G.fast? Or could we see a near-term acceleration in CapEx to achieve that? And then finally, do you see that as an upselling opportunity for the market to sell higher speeds for higher prices? Or is it an opportunity to attack cable more vigorously and further accelerate your growth? My second question is around the move to all IP. This is a cost you're bearing that virtually all of your peers are not. I wondered if it's possible to talk about your EBITDA growth in Germany year to date if you stripped out that cost of the migration. I'd imagine you'd be growing low single digits. Thanks very much.
Let me take the first question, Tim. Look, we took, we go our own way. And by the way, the idea was, how could we cover Germany with 50 megabit per second by 2018? And what we see with all, let's say, the technical developments these days, going to VDSL, going to vectoring plus, and now we are working on G.fast as well. We see that we could, at a significant lower cost and in a much faster way, we could ramp up bandwidth up to 250 megabit per second in this piece of copper-based, technology. This is, by the way, satisfying more customer immediately. If you talk, for instance, about the vectoring area, which is now an investigation from the Bundesnetzagentur, we're talking about 6.2 million households in Germany, which we could, ramp up until 2018 with these technologies. Now, that said, the moment where we're ramping it up, by the way, this year, fiber-based 3.8 million households in Germany only. So to see how many households we have already ramped up here, and there's another million plus coming by the end of the year, gives us a huge opportunity. And we see that customers are willing to take that. They are interested in getting, let's say, the bandwidth. And the moment we do that, we could even upsell new services. The classical one is entertain. We have seen 55,000, net adds in Germany on entertain in the quarter. And if you would ask me now, openly and honest, that's not enough. We should do better. We have to do better because the functionalities of entertain is great. And on top of that, the bandwidth is given. So that is definitely something where we're internally discussing how to improve. Now, the answer is simply yes, there's more to come. On top of that, we are looking very deep into technical developments. G.fast is another opportunity, up to 500, megabit per second, which we could provide already today in the labs. And if you go to bonding, you could double up that speed. So there are a lot of interesting technologies which could help us, to accelerate the build out without, let's say, going GPON or fiber to the home. Second, there's 5G coming. And I think what we haven't discussed in the community yet is the question is how much of the fiber build out, especially in the rural areas, could be substituted by 5G technologies with receivers on the houses and indoor coverage coming from the repeaters. You could go up, to high bandwidth. I've seen a coverage of 3.8 gig already with 5G. In the labs, and this might be as well technology. I think there's not a black and white. There's not a fiber or non-fiber world. I think there is going to be a hybrid world, and we have to be, let's say, smart on how to combine the right technologies for the right customers.
Yeah, and before I answer the question to all IP, the remaining element question was upselling opportunity for the market or attack of cable. I think it's clear it's an upselling opportunity for the market. That is what you see already in the marketplace, that people are willing to pay more if they get more and if it's really of value for the customer. So on all IP, your assumption was right. It's a single digit number up if you strip it out. Correct for the quarter, correct for the year. You've seen the profile we've given in the capital market days. In 15 and 16, it will peak the effort in terms of all IP. From 16 to 17 onwards, it will start to decline. Remember the curve we've given you, but your assumption here is correct. Yeah.
Thank you, Thomas. The next question is from Ottavio at SocGen. Ottavio, can we have your question, please?
Hi, thank you very much for taking the question. It's a very simple question regarding pricing. Looking through all the slides you have on pricing, I can see that you almost changed nothing from quarter to quarter, but one price, and that is Magenta 1 L. You reduced by €5. When I look at the mobile components, Magenta Mobile actually remain unchanged. So the €5 looks that have been taken out of the fiber element, that it's almost a 20% reduction. So my question is, first of all, how much of the fiber lines have been sold through Magenta 1, and if this has been changing over the last 4 quarters? And second, the rationale behind the discount, it's basically an effort for upselling to move the customer through the value chain, or second, better economics, consider now the coverage of fiber starts ramping up, and therefore you can afford to be more aggressive on fiber without any impact on the bottom line. Thanks.
Yeah, I'm not sure whether I got it all right, but I try, and you give me feedback whether it fits. It answers really your question. First of all, roughly, if you look at the numbers in terms of our broadband numbers, roughly 10% are supported by Magenta 1. That's the share of Magenta 1 in the uptake of the fiber broadband numbers. Number two, or second part of the question was the reduction. Let me remind you that we're talking about the Magenta 1 L here. That is from €70 a month upwards. So we're talking high-end pricing here, not low-end pricing. And basically, I think what we have changed is the entertain premium part, which was €10 up into €5 up. So the component which was pricing-wise changed was the TV part to make that more attractive, because obviously Tim mentioned that we're doing okay, I would say, on entertain on TV. It's like 10 to 15% year-on-year growth every quarter, but we should do better. And obviously, if we're talking about €70 upwards, what you should also do is consider whether you create just by pricing barriers to enter. So our assessment here was we need to make television more attractive. We're talking about high pricing segments, and we moved from 10 to 5 on the television side. Not sure. Maybe you give me feedback whether that answers your question, really.
Ottavio, can I answer your question?
Yes, it does, and I probably want to use my second question here, if I can. And it's basically, if the idea is to push TV, why you only changed the price on the one package and not all the 3 Magenta 1 packages? And the second is going back to the first questions, the fiber mix. You said that of the Magenta 1, only 10% of the package is taken with fiber. Have you seen any sort of changes since you launched Magenta 1? So it's been around that particular share.
Yeah, first of all, on television, the logic of Magenta packaging is that TV starts with the M package. So you have SML, and in S it's excluded. So in S it's just mobile and broadband. From M upwards, you have television in there, because obviously TV is a relevant element in our upselling scheme. So we don't want to give it for free away, but it should upsell. But we also need to make sure that the upselling price component is not too high. So that's the reason why we changed there, and not further on the lower end. And the second question was fiber mix of Magenta 1. Hannes, you need to help out there. I don't have it at hand.
Magenta 1 is we've just answered. We have answered that question from my perspective. If that's not clear, Ottavia, please contact me and we'll sort it out.
Maybe the only one element I can tell you is that in the vectoring rollout areas, we have a higher share of Magenta 1. You know, that's the mechanic. But I'm not sure whether that ultimately answers your question. We will follow up.
Okay, so with that, I previously had a question by email kindly provided by Emmett from Morgan Stanley, and the question was, maybe you ask it directly again now, if you could have a question from Emmett Kelly at Morgan Stanley. Emmett, can we get you? Out in that case. Emmett has asked, the closure of the DTEGY deal has been provisionally approved by the CMA. This will see Deutsche Telekom owning a 12% stake in British Telecom, pending final regulatory approval. Do you view this as a financial investment, or is it a first step in the cross-border consolidation that you have mentioned in the past?
So first, we are indeed very happy, let's say, with the future stake in BT, which has already gone up, by the way, in the value since we acquired or agreed to acquire the 12% stock here. I think taking up the business to the next level by partnering, this does not mean for us, to have the majority. More generally, I think we have communicated a clear and attractive plan for our existing portfolio at the Capital Markets Day. And yes, we are creating a pan-European network in the next few years, but primarily purpose of this is improving efficiency and our internal customer experience. And I think it is clear from our track record, please give us here some credit, with any transaction we would be committed to create value for our shareholders. So we have no decisions, to stepping up on BT. We're just in the approval phase. We are building a more intense relationship after the merger approvals. I will go into the board of this company if I get voted here and as expected, and then we will see. But nothing else planned. I think the opportunities we have created in other business with minority shareholders have created a lot of, let's say, shareholder value already.
Okay, since we had the technical difficulty earlier in the call, we are just extending the call by a couple of minutes, so we take two more questions. The first one from Robert Grindle at Deutsche Bank. Robert, please.
Yeah, hi there. A couple of my questions were answered, but I was curious to see whether you felt, and perhaps it's early at this stage, but whether you felt any impact from the two big sort of news events in Germany recently, i.e. Volkswagen, is that a big customer of yours, or and immigration, is that starting to have a material effect on your mobile business, for example?
So let me take the immigration issue first. I think it's a big, challenge for everybody, for the municipalities here, for the government, and as well. And Deutsche Telekom has taken very early, let's say, a position here. We have started to build out wireless LAN hotspots in every refugee camp here. That is, by the way, a service which we provide for free. Because we think it is very important for the refugees, to stay in contact with their families. This is something which we are driving. We have already, let's say, covered more than 50 of the refugee camps in Germany with wireless LAN. The second one, what we do is we have built a platform, an online platform, where people, could document their biographies, which we could use then for recruiting purposes. The third one is we are discussing with the government that for the registration processes within the refugee camps, you need civil servants. And we have civil servants on board, so we could maybe transfer civil servants from Deutsche Telekom into this refugee camps. And by the way, we're not talking small numbers here. They really have a need to accelerate the registration processes within these camps. And on top of that, we have 100, created new apprentice. Is that the right word? Jobs within Deutsche Telekom for people who get allowance to stay. So that is, let's say, the situation. We are doing what we can do from Deutsche Telekom's perspective here, and this is highly appreciated from all stakeholders. The second question is with regard to Volkswagen. Look, I think what we see here is that the CEO Müller is taking a strong direction. He is working on cultural change. He's addressing the right topics. You know that we have made some comparable experience in the early 2000s, so I think he's addressing this topic. It's not something where we would say this is a German issue or let's say relevant for all companies here within the company in Germany. And with regard to the cars and to anything of our fleet, we are in discussion with Volkswagen to understand, let's say, where the investigation stands and what that means for the fleet management of Deutsche Telekom.
Thank you, Tim. The last question for today's call goes to Fred Boulon at Bank of America, Merrill Lynch, please.
Hi, good afternoon, guys. Thanks for taking the question. Firstly, on mobile, if you could, in Germany, if you could discuss your network differentiation strategy. Is this something you can maintain in the medium term, considering what VOD is doing with Spring and the current merger of the O2 and E+ mergers? And do you think you're in a position to extract premium pricing in the long run here? And secondly, on your data, mobile data strategies, so you've increased data allowance by 30% in a couple of price plans in September at unchanged pricing. Is this something which is it necessary to stimulate data growth and eventually monetize data, or are you not potentially postponing the data monetization process? And then a different question around content as a differentiating factor in mobile or fixed. What are your thoughts here in Germany, but also in the US, where you're starting to see your competitors investing in dedicated mobile content? Thank you very much.
Look, the entire purpose of Deutsche Telekom strategy, and this is now in place since 2 years, is that we do not want to compare on high street prices. On stupid 9.95 or 15.95, that we want to have, we are selling connectivity. And people say, I trust into Deutsche Telekom, they have a better service, they have a better connectivity, it is easy to access the different networks, and there are additional service which I only get with Deutsche Telekom. So we really want to be different in the way how we're doing. The basis for that one is the network. And what you see is, and by the way, I think you give us some credit for that one. Nobody in this industry is, investing at a speed as we are doing. 87% high LTE, already 7 million LTE customers on it. We have opened up 3.8 million new households with high bandwidth. We're going to vectoring and vectoring plus up to 250 megabit per second very soon. We go into the rural areas where people really are in a more difficult situation than in the big cities. So we have the connectivity and we build the connectivity. The hybrid router is an innovation which we brought forward, highly appreciated, especially from customers who do not have the bandwidth today. And on top of that, we have launched new tariffs at the IFA, our consumer fair here in Germany, where we have now integrated family packages, especially for the kids, so that the kids are always, approachable. They do not have to pay for that one on voice side. And their data volume is growing with their age or by the decision of the parents, how much they allocate to this KISS. And on top of that, maybe you have not seen that product, but I think that is a real innovation in our industry. We are trying to substitute the old DECT or the old fixed line telephone by a tablet in the household. So on this tablet, by the way, it cost only 49 euros for Magenta 1 customers. It is nicely selling around 15,000. We are trying to sell, a tablet, and on this tablet you find your bills, you find an immediate, let's say, SMS, email, or a chat with our customer service desk. You could do all internet services, and you could use, and all these applications are pre-installed. You could use all, let's say, additional services from Deutsche Telekoms, being it smart home, being it the entertain services, or just, being as home talk or conference calling. So all of this is pre-installed on this tablet. And this is, let's say, kind of new digital cockpit for, let's say, families at home. So this is the idea how we are trying to differentiate our services and upselling the new categories into the household. So I think that gives you the idea. I think we are on a good way with regard to our differentiation strategy, and compared to the other players in the market, we earn already a premium in the market, and our brand recognition, our customer satisfaction scores are significantly higher than the ones of our competition here in Germany.
Fred, on your specific question on the allowance increase by 30%, that's basically, I think, the blueprint for monetization. Because what we've done is we kept the allowance of the S tariff plan, which is a half of a gig, where it was, and we increased it on the S tariff plan. So the increase of the allowance was on a price plan. If you buy this price plan together with a Samsung handset or an iPhone, you pay 60 euros for that. And basically what we're doing is by spreading between the low end and the mid and high end to make that mid and high end more attractive by that data allowance, and moving the people up from that lower price plans like the S into M and L. That's the intention, and I can tell you with the current numbers we're seeing, it works. So it's the blueprint, the positive blueprint, and not the postponement of monetization process here.
Okay, so with that, I want to hand over to Tim for some closing comments.
Look, first, excuse me for the inconvenience at the beginning of the call. I think we are now, we took 50 minutes longer, so I think we had plenty of time to discuss the current situation. We are very happy with the development in the quarter, especially on the free cash flow side and the OPEX side. I think the market is doing well. You could do always better. What is, let's say, last time I mentioned, what are the tasks which we are working on, and you have seen that we have taken out discounts, to improve the revenue, and that we have improved our cost base here. And let me stress, a little bit, let's say, what is, let's say, the direction for the team here for the upcoming weeks and months going forward. The most important thing for us is the monetization of our data build-out. So we are doing heavy investments, and we want to earn the money back. We could do that by good take-up rates and utilization of our infrastructure. We could do that by upselling in our tariff structure, and we could do that by differentiating by new services, just to give you 3 examples on that one. So the monetization of the investments is in our primary focus. Secondly, we are very intensively discussing efficiency steps within the organization. On the cost side, but as well on the way how we digitalize our processes in the organization, and how we could bring the e-company into the online service proposition in a much more broader way as we're doing that one. On the strategy side, I think we are focusing on spectrum in the US. That's a very important thing for us. And we are focusing on CapEx because, you have seen that the optionalities that the moment we build up networks, the moment we are able to monetize and to create a differentiator towards customers. So this is something which we are discussing intensively. And as well on the partnerships, we are doing a lot of efforts. This quarter was very much about partnerships in B2B. And I urge you to really look into our cloud service businesses because apart from the Intercloud, we have launched the One Telekom Cloud, which is a model which is able to really compete with AWS. And this based on a German cloud, this based on the German security and data standards, and this based on an individualized sales force which we have here on the ground. I think this could be a very interesting, significant value driver going forward. And on the portfolio side, I think there are three areas which we are looking into that one this moment. The one is, as you mentioned, Netherlands. The second one is Romania. And the third one is our Poland activities, where we are not happy with the performance currently. I think this is an operational issue which we internally have to address. And this is our way going forward. But we are very confident that we're going to achieve, let's say, our target for 2015 and confirm the capital market guidance going forward.
Thank you, Tim. Just on the subject of cloud services, we are planning to do a webinar on cloud services sometime early in 2016. So please be aware of that. And again, our apologies for the technical difficulties we had halfway through the call. And also apologies we couldn't take all the questions that were presented to us. So please contact with any further questions, contact the Investor Relations Department, and we look forward to helping you out and explaining what may be left to explain. And with that, I give back to the operator.
We'd like to thank you for participating at this conference. The recording of this conference will be available for the next 7 days by dialing +49 1805 2047 088 via reference number 473878 #. We are looking forward to hear from you again. Goodbye.